we will discuss about an important topic, the differences between the concept payment and expenditures. Usually both payment and expenditure sounds very similar, but in fact from the accounting point of view, from the conceptual point of view, they are not the same. So let's have a view about what are the main conceptual differences between the both. When we talk about the payment, it represents the payment of money. That means the money which has been already made the payment. But when you talk about the expenditures, it includes both, whether it is paid or yet to be paid. So expenditures includes the expenditure paid as well as payables. Second difference is that when we talk about the payment, it includes the payment for any financial year. That might be for the previous year, that might be for the upcoming years. So it includes all the years. But when we talk about the expenditures represents all those expenditures which is related to the current financial year only. It does not include the expenditures involved with the previous year as well as the upcoming years. The next difference is that the payment represents the payment of cash. That might be in form of the cash, that might be in form of the check. But as soon as we make the payment, it is called payment. But all cash payment does not represent expenditures. For example, if the business firm is giving a loan to someone else or the other firms, so payment is being made, but that payment is not considered as an expenditures. The allowing loan, payment of the loan is not called an expenditures, right? So it is all cash payment may not or should not be the expenditures. Next, the payment includes all items. All item means what? The capital items, the capital payment as well as revenue payments. Already in the previous video we have discussed about the capital items and revenue items, right? But when we talk about the expenditures, it includes only the revenue expenditures only. It does not include capital expenditures. Capital expenditures means all those expenditures which we made in case of the purchasing any fixed asset, land and building, plant and machinery, furniture and fixture, all these things. They are not considered as an expenditure because that is purely acquirement of the assets. So expenditures include only revenue expenditures, not capital expenditures. The next difference is the payment follows the real account rules. What is the golden rule stands for the real account? Debit what comes in, credit what goes out. So according to the real account, the payment has a credit balance because it is the amount of cash that is going out of the business, while the expenditures follows the nominal account rules. What is the golden rule stands for the nominal account? All loss and expenses are debited, all profit and incomes are credited. So expenditure has a debit balance when the payment has a credit balance. These are the conceptual differences between payment and expenditure. In most of the cases, in case of the most of the students, they thought that the payment and expenditure are same, but they are not same. They are different from each other, and on what basis, what conceptual ground they are different, it has been discussed here. I think this is clear to all of you.